Hello, it's Wednesday, May 1st, 2019. I'm Steve Houston with Compass Communications, and I'm here again with Joe Terrell of Terrell & Company. And we're going to talk a little bit about the markets and investing. And Joe, the first 4 months of 2019 are in the books, and to read the media reports, it's been a great 4 months. And earnings, which just came out, the earnings look pretty good as well. How do you see things?
That's true, Steve. Now, one of the things about the 20% approximate gains we've had in the first 4 months of 2019, that basically is getting us back to where we were before the markets fell 20% in December of 18. So when you hear on the news, markets are making record highs, they're really only going back to where prices were 12 to 18 months ago. And we are making record highs, but we're making record highs by inches. So if you've been a patient investor and have held things for the last couple of years, you don't have outsized gains with all the ups and downs.
The same thing with earnings?
Well, earnings are actually, from the first quarter of 2018, earnings overall are down slightly if you measure all companies. There's no problem with earnings, meaning that I'm satisfied with the holdings we have and how earnings are coming out. But earnings are not booming. They're not up 10 or 15% over where they were a year ago. And maybe we can discuss later why something like that is. So satisfied with earnings, but they're not booming. Very satisfied with the markets because as we said in some previous interviews, world economy's doing fine. Yeah. Consumers around the world are doing fine. We're not getting ready to go into a severe recession like the markets were worried about last December, and we have made back the losses that occurred in December.
So are you making any changes in your portfolio based on what you've seen so far for the first 4 months of this year?
Subject to some of the companies and individual news, yes. We still very much like the financial stocks, the banks that have been out with earnings reports. Nothing there that you wouldn't look at and say, I like that. Banks are still doing great. The expenses are going down. They're beneficiaries of the massive movement of people banking online. They're generating tons of cash. I look for, by the time we get around to doing a June meeting, you'll see significant increases in cash dividends and stock buybacks. So selectively, yes, we are predicated upon individual news.
Now, we just saw on the ticker up here that the Fed just completed their meeting, and inflation numbers didn't quite hit what they thought they would hit. And then you shared this article with me in Bloomberg Business Week that hit people's mailboxes. Is inflation dead? And I think the Wall Street Journal had a similar article just a few weeks back. Is this a Sports Illustrated curse here that we're seeing? Or what do you make of this?
Well, the first thing, it reminds me of back in 1982 when Time magazine ran a cover story called The Death of Equities. And within a couple of months after that, the stock market took off and it's never looked back, and it's up 25 times after they ran an article about the death of equities. This article talking about inflation being dead, and you mentioned Wall Street Journal having some articles about inflation no longer being a concern to anybody. The Fed today has announced they're a little concerned that they have a 2% inflation target, and inflation's not running more than 1.5%. It's putting thought in people's mind that inflation, according to that, it no longer is a problem, and people should ignore the potential of inflation. I wholeheartedly disagree with that. Inflation isn't dead. It's been very tame the last 10 years. But that doesn't mean we can't go back to running higher rates of inflation and therefore have higher interest rates, not lower. And therefore, in some ways, initially, higher inflation can also hurt the markets. So I'm not predicting this is what's getting ready to happen. I'm only saying that when you see the media come out and start running articles about inflation's dead, don't worry about it, you do the opposite. You better start worrying about it, and you better start thinking about it and know the potential for inflation being dead and we'll never see inflation again. Don't you count on it. You better continue to invest with the fact that I do have to be concerned about inflation.
So hold off on the extinction of inflation. That's Joe Terrell, founder of Terrell & Company, independent wealth management with $700 million in discretionary assets under management. Joe, we'll meet in what, about a month or so, maybe in June sometime? Talk a little bit about the markets.
Let's talk about the first part of June, and let's see what's changed. We, Steve, at Terrell & Company are in the camp. Economy in the United States stays strong. Economy around the world stays strong. Let's not forget that confidence of business people all over the world is resting upon settling trade issues between China and Canada, between Europe and the United States, certainly between the United States and China. We got to get these issues behind us to keep world economic growth growing. And by the 1st of June, we should know some answers to some of that. Markets in general, stocks in general, are fully priced. And we will see by the 1st of June if this trend towards continued world economic growth isn't still very viable. But there are issues out there.
Thank you, Joe. And thank you for joining us. We'll see you in about a month.